Hey guys, Tesla Model Idaho back with another video. Today I am taking a break from the Tesla and focusing on a different topic, financial topic called dividends. I think most people know what a dividend is or has heard of one, but they're essentially payments that are made by publicly traded companies to reward investors for holding the stock for an extended period of time or some period of time. Not every publicly traded company has a dividend. So I'll show you kind of how to identify which stocks do, some of the important dates that surround dividends, and some of the math that you can use to identify what a dividend is paying and how much money will be coming back to you at the end of the day, because that's what is most important. So if we look at this stock here, ABBV, it's a publicly traded pharmaceutical company, medical device type medical company, traded on the New York Stock Exchange. It is trading today at $115.97, 94 cents, etc. It's fluid. But if we scroll down, there's some attributes here. This is E-Trade, but any stock ticker when you type ABBV should show you similar information. And so what we're looking for are some dividend related attributes. And if we look down about halfway, you'll see dividend yield, 4.49%. We'll talk about what that means in a moment. A quarterly dividend of $1.30. That is how much money per share per quarter would be paid to you for owning the stock. And then you have two dates here, an ex-dividend date, July 14, 2021, and a dividend payable date of 8/16/2021. We'll talk about those two dates first. There's really four important dates. The first is a declaration date, and really all that's saying is that the company is declaring a dividend will be paid for this fiscal quarter, or the quarter that's coming up, and they announced that on June 20th of 2021. Yes, we will be paying a dividend, and here is the ex-dividend date, and here's the payable date. That's typically the two attributes that they would say. So the ex-dividend date is likely the most important aside from the payment date. This date is the date that you can no longer receive the dividend. So you must be on record as a shareholder as creating a position within the stock, purchasing the stock prior to July 14, 2021. If you buy on July 14, 2021, you will not receive the dividend. So essentially you're looking at this date and you're saying, I need to purchase one day or more before that date in order to receive the dividend. 2 weeks later or 2 weeks-ish later, on July 31st, they will do a shareholder note of all the people of all the individual record shareholders that are on file. It's really an internal milestone, and just tells them that here are all the people that are on record. And then the payment date comes 8/16, August 16, 2021. That is the date that you would be deposited your money for holding the stock. So a lot of people might wonder, do I need to hold the stock from, say, 7/13 when I purchase it until August 16th of 2021? You do not. You can sell any moment after this ex-dividend date. You can sell the shares and you will still receive payment for the position that you owned prior to the ex-dividend date on August 16, 2021. So sometimes you will see a dip in the stock around this time, and part of the motivation or part of the justification sometimes by these companies is saying, hey, we're paying the dividend to kind of balance out the fluctuation that you might see from after the ex-dividend date, or that's factored in is what they're saying. So some of the math behind dividends, again, you will see a dividend yield here of 4.49%. How do you calculate that? You take the annual dividend and you divide that by the stock price. So what does that look like? If we pull up a calculator here, we would calculate the annual dividend. So we have the quarterly dividend at 1.3. We'd multiply that by 4 to get the annual dividend. So we have 5.2. And then we would divide that by the stock price, which is 115. We'll just use 73, which is where it closed last night, and we receive a value of 4.49%. 4.49%, which is matches exactly the dividend yield that they have there. So quarterly dividend is what you would be paid for that fiscal quarter. If you were on record for the ex-dividend date, you would receive $1.30 per share that you own. I've just put an example down here. Let's say we had 189 shares. You would be paid $1.30 per share. You would be paid $245.79 just for owning that share from prior to the ex-dividend date. Whether you sell it or not after that, you'd still receive $245.79. And if you held that for the entire year, the 4 quarters of the year, you can estimate somewhere around $1,000 return. So not bad for holding the stock for a year, and in theory, you hope that the stock also increased over that time, so you have an increase in the value of the stock, and then you also have a dividend payment that as well. Now that dividend comes to you, it will be taxable just like anything else, so you will receive a form from your provider, your exchange provider at the end of the year that you'll provide to the IRS. It'll be taxed just like anything else. One way though, one other option is to take that money and put it into what's called a DRIP, Dividend Reinvestment Program or Reinvestment Plan. There's typically a checkbox that will allow you to select that you want to enroll in DRIP, and all it means is it's going to take those dividends that are paid back and roll those back into the share. So you're compounding more dividends so that the next quarter you have more of a dividend payment, and so on and so on, and hopefully you roll that into a nice nest egg. It will be paid in fractional shares because it's likely that you're not going to hit it exactly on the amount or the dollar that the stock is at. This was a bigger deal back in the day prior to Robinhood and some of these institutions that now allow you to buy fractional shares anyways. So this is something back in the day that you would allow you to buy fractional shares. If we look at my Robinhood account, I owned AbbVie, a little bit of AbbVie in this back at last quarter, and you could see because it says because you owned 8.63 shares of AbbVie on April 14th, you received a dividend payment of $11.23. So it multiplied the 1.3 by 8, got $11. It said it will be reinvested at market opening the next day, and then you can see that was on a Friday. So on Monday, it took the $11 dividend, it reinvested that into 0.096 shares at an average of 116.77 the following day. So, that's a quick and dirty on dividends. They're very easy to find. You can go to Google and just type in any share and then look for the dividend yield. If it doesn't have a dividend yield or a dividend X date, then you know it's not a dividend paying stock. Although sometimes if it's in between stocks or in between declaration dates, it may be a dividend paying stock. It just may not have a new declaration announced yet. So you just got to look for the yield. As long as there's a dividend yield listed, you'll know that it's a dividend paying stock. Although any publicly traded company can pull their dividends at any time, so you can look for someone at some point to say, we're not profitable anymore. We can't sustain paying a dividend anymore at these prices, so we're not going to pay for this quarter. And that's where that declaration date really comes in. So they're just confirming that again. Yes, this quarter we're going to pay the dividend over time. You can just search high yield dividend paying stocks in Google. You'll get a list of all sorts of different companies that pay dividends. So hopefully this was useful. Like and subscribe to the video, and have a great day.